Good afternoon, everyone, and welcome to Accordance's webinar VAT in the time of COVID-19. My name's Andy Spencer, and I'm joined this afternoon by my colleague Alex Smith. So it's exceptional times at the moment, and what we wanted to do this afternoon was guide you through some of the measures that are being taken by tax authorities around the EU and also give you some practical guidance. So if we have a quick look at the agenda. So initially, we will give you that overview. We're not going to go through every member state because that would take too long. We're going to talk about the different approaches that are being taken by some of the main member states. We'll then talk about how you can manage your cross-border VAT obligations, give you some practical tips for managing VAT in the current situation, have a quick look at some of the wider impact of COVID-19, how you can stay up to date, how we can help you, and then there's also a question and answer facility. So you should be able to see an option for you to be able to answer questions. So we'll try and answer those at the end. If there are simple answers, we've got the facility to be able to answer them as we go through the webinar this afternoon. Okay, so if we now move on to the overview of the measures around the EU. So the European Commission has recommended that member states provide support to affected businesses in helping them to meet their VAT liabilities in these unprecedented times. As is often the case with the VAT, there's no common approach being taken, and therefore the response around the EU has been very varied. At this stage, we've got some member states who aren't providing any relief at all, so they're not taking any steps at all. It's possible because that's the VAT return deadlines in their countries aren't imminent, or it could be because the impact of COVID in their countries is not that significant, but it's possible that they will introduce measures in the future. Some member states have extended VAT return deadlines and payment dates for all taxpayers, and others have targeted certain taxpayers. So it's a real mixture of responses, and the position is very fluid, and it's often changing on a daily basis and sometimes more than once during the course of a day. So it's really tricky to keep up to date and make sure that you know what is available in the relevant countries. And the idea of this afternoon's webinar is to help you to get an insight into some of the measures and also how you can manage your obligations. So if we start by looking at the position in the UK, so the UK initially announced some measures in the budget on the 11th of March. And at that stage, it was really just in relation to giving businesses the opportunity to arrange time to pay agreements. That was relatively quickly updated on the 20th of March, and that was further clarified on the 26th of March. I think the reality with the current situation is that tax authorities and governments are making announcements often at great speed, and there's not always full clarity about what the measures relate to in relation to the measures that are being taken. So the UK clarification was really welcome. What it's confirmed is that any VAT payments that are due in the period between March the 20th and the 30th of June 2020 can be deferred. So the repayment has to be made by the 31st of March 2021. So there's nearly potentially up to a year in order to make those payments. And it appears that it's the payment date that is the key factor in this. So not when the return has to be submitted, but rather when the payment is due. So for example, the return for May, if you don't make payments on account, so if you aren't subject to that regime for large payers, your VAT return is due on the 7th of July. So that would mean it would fall outside of this period, so that the VAT payment holiday wouldn't be available. Obviously, this may change. This is the initial response of the government to the crisis, but it's possible that that might change in the future. So the position in the UK is there's no need to apply. It's automatically available to every taxpayer. Customs have confirmed that it applies to all UK VAT registered businesses, and that includes non-residents. The initial announcement said it was all UK businesses, but they've now confirmed that it actually applies to anybody that's VAT registered in the UK. They've also confirmed that no penalties or interest will be imposed as long as you make the repayment by the 31st of March 2021. It's not clear what regime will be in place if you don't make the payment by that date, because the normal method of penalising businesses for not submitting on time is default surcharge, which is a fixed penalty, and that also depends upon whether you've been late in the past. So we'll have to wait and see if there is clarity about what happens if you can't make the payment by that date. And it's possible also that that date could be extended depending upon the extent to which COVID has an impact on the UK economy. There's no extensions to the deadlines for the submission of the VAT return, so you need to continue to make the returns on time, but you don't need to make payment. It's also worth mentioning that it's not compulsory, so you don't need to take advantage of the VAT payment holiday if you don't want to, but if you do, you don't need to meet any tests in order to demonstrate that you've been affected by COVID. So if we can move on to the next slide, there's some key points which need to be made. So if you make payment by direct debit, you'll have to cancel that because customs would normally take it. So if there is a payment by direct debit, cancel that. Customs have also confirmed that it applies to payments on account. So if you're in that large pay regime, you don't need to make payments on account if they fall due within the period from the 20th of March to the 30th of June. But they have also confirmed that it doesn't apply to import VAT. So if you're importing goods from outside the EU, import VAT would still be payable. And if you've got a deferment account, you'd still need to make the payment. Obviously, you can recover that on the VAT return, but you can't defer the payment of that import VAT. One important clarification is that it doesn't apply to MOS payments. So that's the mini one-stop shop, which at the moment is for telecoms, broadcast and electronically supplied services around the EU. Now, the logic behind that seems to be that that's not money which belongs to HMRC, so they haven't got the ability to be able to say you can defer the payment. They have to pay that to the other tax authorities. So if you've got any MOS payments due in the UK, you need to continue to make those payments. The VAT payment holiday also doesn't apply to any assessments or any amounts that you owe to customs for periods outside of this of the 20th of March to the 30th of June. But what they have done is introduced a time to pay service in respect of COVID-19. So if you are in financial distress, you might be eligible to get support with entering into an agreement where you can get time to pay. So you don't need to pay that liability straight away. So HMRC have set up a dedicated COVID-19 helpline that's been available for the last few weeks. They employed, or they reallocated a number of additional call handlers, but our experience so far has been that it can take a number of hours to be able to get an answer to your questions. That may have died down now that they've provided more clarity in relation to who it applies to and what type of payments, but there's potentially a wait if you're going to make use of that facility. So I think the position in the UK is it's probably one of the most generous around the EU, and the way the government have looked at it is that they've seen this as a very quick way in order to be able to introduce liquidity into the market. So if you've got VAT to pay, you don't need to pay it, and you can then use that within your business. And it's much quicker to access than being able to get a grant or a loan or any other type of funding directly from the government. Obviously, not all taxpayers will be impacted in the same way. So if you don't have any VAT to charge to your customers because all your supplies are zero rated, or you're normally in a repayment position, this isn't going to be of benefit to you. But if you do pay VAT to HMRC, you can take use of this payment holiday. So that's the position in the UK. We'll then move on to the position in the Netherlands. As I said, we're not going to talk about everywhere, we're just going to talk about a few countries. So the position in the Netherlands is that they've also introduced a deferral system. So it's if you're facing hardship as a result of the crisis, the way that they've done it is that you need to apply. So there's a written application that needs to be made to the Dutch tax authorities. The way that it works is that if you want a deferral of up to 3 months, that will be automatic on receipt of your application. there's the potential for you to be able to defer it for a longer period. But if you're going to do that, you're going to need to provide evidence to show why that initial 3 months isn't going to be sufficient. And that's normally going to need to be third-party evidence to show that your financial position has been significantly impacted by COVID. They're also going to cancel penalties or interest for late payments. Again, that's going to be on request, and they've also reduced significantly the rate of interest that's going to apply in relation to assessments and debts. So they've done all they can in relation to reducing the amount of the charge that's going to apply. So we can see in the Netherlands that they've got a similar relief. It's not as generous as the UK, but it is going to be on application. And it remains to be seen what happens with countries where there is a need to apply, because I can foresee that there's going to be, the tax authority is going to be inundated with applications, and how are they going to be able to process them in time? And they may decide at some point that actually it becomes automatic. So that's the Netherlands, where you can apply for deferral. If we then move on to the position in Belgium, so they've introduced automatic deferrals for both returns and payment. So the next return, and the one that most businesses are going to submit, is the Q1 2020 return covering January, February and March. That's going to be due by the 7th of May. Normally it would be due on the 20th of April. So there's a couple of week extension there. And the payment for that return can be deferred until the 20th of June. So again, that would normally be due on the 20th of April. So there's a 2-month extension there. So again, not as generous as the UK, possibility that that might be extended more in the future. So as I mentioned, there's no need for any application. And if you do make use of that deferral, there's no imposition of penalties or interest. So again, all of these things, they're not compulsory. So if you want to pay your liability, that's fine. And some businesses that we're working with are saying, well, I'll pay some liabilities, but not others. So it's your choice as to what you want to do. Obviously, you need to think about making sure that you're going to have the funds at the time. You can also apply for time to pay for any outstanding debts that don't fall within that Q1 2020 period. So that's Belgium. We'll then move on to Germany. So the position in Germany is they've introduced a deferral of payment, again on application. So that application has to be made before the due date. So the due date for March returns is the 10th of April. So there's a short time scale in relation to getting those applications in. The way the Germans have approached this is slightly different from the UK. They've said that you need to show there's a significant immediate impact of COVID-19. The reality is that once you've made the application, which is on a specific form, it's likely there's going to be automatic approval at this stage, because there's not going to be time for the tax authorities to review all the applications and formally grant approval before the deadline. So if you've made the application, you can defer the payment. But our understanding is that it's very likely that at least some of these applications will be reviewed at some point in the future. So the German tax authorities are very keen to make sure that where people are making use of this facility is because there was a genuine significant impact in relation to COVID-19. They've also stated, and there's a declaration that you need to make when you make an application, that false applications can lead to criminal prosecution. So clearly they're treating it very seriously and wanting to make sure that it's only being used where there is a genuine need. And obviously that's potentially difficult to demonstrate, but if you can show that your sales have significantly reduced and that the cash that you've got on hand is not going to endure for any length of time, there's potential for you to be able to demonstrate that there's an immediate need, and we can help with that process if necessary. So if we move on to a couple of other countries where we're just going to talk about it in very high level. So in Italy, there's a number of measures, but they're being restricted to resident businesses at this stage, although that may change in the future. In Spain, there's the potential for the deferrals for businesses below 6 million turnover, and that's important because that's the threshold for the immediate supply of information, SAII, that applies in Spain, and also where the debt is less than 30,000. but it's not clear entirely how that's going to be made, how you can achieve the deferral if you don't have a Spanish bank account. In France, the measures only apply in relation to direct tax at present, but it's possible that they'll be extended to VAT. And in Ireland, the deferral is automatic if you're an SME, which they define as a business below €3 million turnover, but larger businesses can apply to the tax authority. So what I hope that's shown is that lots of countries are doing lots of things to support businesses, but they're all taking a slightly different approach, which means that it's complicated to be able to navigate through what's available and what you can do in each particular country. So if we move on to what can happen if there's no deferral available, so that could be because the country hasn't introduced anything at all, or it could be because you don't qualify in order to be able to make use of that deferral scheme. So obviously businesses may decide that they're not going to make payment because they need to retain their resources, retain their cash for other priorities, and they're going to not make payment even though there's no formal scheme involved. So it's a possibility that time to pay may be available. Most tax authorities allow that under normal rules, so outside of COVID-19, so it's possible to approach them and get a time to pay agreement in relation to the debt. If that's not available, you need to consider the consequences of non-payment. It's likely that late payment will lead to penalties and interest. That's the normal situation in most countries. The systems that are in place vary, but normally if you pay late, you can expect to receive some sort of financial penalty. You may be able to appeal those, but that can't be guaranteed. So for example, in Germany, we've got the deferral scheme, and they've also said there's the potential for penalties to be waived on application. So it remains to be seen if a business was eligible to use the deferral scheme and chose not to, and then incurs a penalty, whether that would then be waived. So I think the reality is for a lot of this, we're in very new ground. So this is unprecedented in so many different ways. So knowing how the tax authorities are going to react where they haven't set up a formal scheme is very difficult to determine. If there's a debt, the tax authorities may also decide to take enforcement action. That's been relaxed in many member states. The normal mechanism for cross-border debts is the Mutual Assistance Recovery Directive, where tax authorities in one member state will ask another tax authority. So it's not clear how that would operate in the current environment. Our recommendation would be that the return is submitted on time, because that will minimise penalties if there is a separate penalty for submitting the return late, and it will also show good faith in relation to the tax authorities. Now, clearly, if you've got issues in being able to obtain data because your business is shut down, that's a different issue, and you need to think about how you can communicate that to the tax authorities. So that's a quick run through what's in place and the options which are available to you. I'll now pass you on to Alex, who's going to talk about managing cross-border VAT obligations.
Thanks, Andy. So during this time, it's really important to manage your VAT obligation as best as possible. So what we recommend doing is taking a practical approach. Initially, what we'd recommend you do is you determine your VAT obligations, and initially that should be prioritized based on deadline. So looking at each country you're registered for VAT in and working out when the next deadlines are and what can be done about that. Obviously, it's important to look at the VAT payable too, but keeping in mind which deadlines first. Once you've worked out when your deadlines are due, it's important to review the position in each country, because as Andy said, there's quite a lot of variation in what reliefs are available. So if you look at each country and you see what the conditions are, you'll then be able to determine whether or not you can meet those conditions. It's then important to come up with an action plan, so determine the specific action you need to do for each country. It's also important to remember to think, do I need to actually take this action? Just because an obligation is available, a relief is available, do you actually need to take that option up? The VAT will be payable at some point, therefore it's important to consider whether or not you want to defer that payment. In terms of the ongoing review, because the situation is changing on such a fluid basis, we're seeing some tax authorities updating weekly, if not sooner. It's really important to manage those daily changes. The important thing next to do is obviously manage the deadlines. So if you've managed to get a deferral of VAT, or you've taken up the automatic option in some countries, it's important to remember that the VAT will need to be paid at some point in the future, and there'll be a deadline. So it's important to make sure that you make a note and are ready to pay that VAT when you are due to do so. So if we move on to managing the cash flow, it's also really important to manage the cash flow in terms of your business needs. So obviously there's a number of measures that need to be done in terms of cash flow. So obviously payments on account for large businesses, as Andy mentioned, in the UK, there's some reliefs available for that. In terms of invoices, it's really important to consider timing. So considering VAT periods, can you delay the invoices? Can it be structured in such a way that you can defer the payment of VAT? And I think it's, you should really consider your options, including taking advantage of any approved methods, even if it's not needed. So moving on to VAT recovery, maximising VAT recovery. So it's really important that you ensure that all recoverable VAT is claimed as soon as possible. This not only reduces the VAT payable, but maximises profitability. You should certainly review VAT on non-recoverable items, including expenses. You should certainly check whether or not the VAT that's been charged to you by your supplier is done correctly. Where it's done incorrectly, we should be pushing back as soon as possible to make sure that that's not due. It's also worth considering whether or not an input tax accrual could be done. These can be available in certain countries, whereby you accrue for input tax towards the end of the VAT period. The other thing to think about is VAT incurred on overseas countries, so where you've got a refund claim under the EU VAT directive. The deadline for 2019 is not till the 30th of September, but that doesn't mean you need to wait until the 30th of September. So you can get those claims in immediately, and you can also make quarterly claims for 2020. So it's really important to really sort of maximise those different opportunities to recover VAT where you can. Moving on to the next slide, bad debt relief. So bad debt relief is a provision that applies in most member states, and it applies where your customers don't pay the VAT due. It varies across the EU, and it's not available in all member states, but it is certainly available in some of the main EU markets. In the UK, for example, you can recover VAT on bad debts after 6 months, provided you meet certain conditions. So for example, in the UK, you have to write the debt off. It has to be put in a separate bad debt account, and then you're able to make the adjustment. In other countries, it really does vary. Some countries are quite strict, and effectively your supplier has to be insolvent in order to claim bad debt relief. Therefore, it's really important to look at not just the bad debt relief provisions, but also the COVID-19 provisions that member states are putting into place. It's also worth considering the input tax position, so whether or not, if you can't pay a supplier invoice, whether or not you have to repay that input tax if you recover on the invoice. In the UK, you've got 6 months, you would have to pay that input tax back. So also worth considering whether or not you've paid those supplier invoices. Okay, what I'll do now is I'll hand it over back to Andy, who will pick up on some of the other wider impacts of COVID-19.
Thanks, Alex. So currently the priority for business is to manage and mitigate the short-term impact. So, and that's, I think, the way that lots of tax authorities have viewed this as well. So they're looking at immediate payment obligations, seeking to provide support to business in those instances so that they don't have to pay the VAT, even though they may have been paid it by the customers, in order, as we said earlier, to inject some liquidity into those businesses so they can use that revenue for other purposes. But I think it's also clear that COVID-19 is also going to have at least a medium-term impact, if not a much longer-term impact. So obviously from a UK perspective, the event that's looming on the horizon is Brexit. So it's got potential impact on Brexit, which we'll talk about. There's also potentially in longer term on VAT rates. So we've seen some countries, for example, Cyprus was proposing to reduce VAT rates on certain items, but I think they realised that, well, if the economy's pretty much slowed, that's not going to have that much impact because people aren't buying things. So they've decided to not go ahead with those, but that's potentially something which member states might decide to implement going forwards. And as I saw earlier, there was a proposal from a former politician to say that the UK should reduce their rates 10%. So obviously that has an impact in terms of prices, as long as those the reduction is passed on to the consumer. There's also a potential delay to changes to some B2C supply, intra-supply of goods rules, so e-commerce rules, which are due to take place on the 1st of January 2021, and we'll look at those in a little bit more detail. And something else that has happened already is that customs have delayed the digital links requirement under Making Tax Digital. Now that was due to come into place on either the 1st of April 2020 or the 1st of October 2020, and they've been deferred until the 1st of April next year. So I think they've recognised that whilst Making Tax Digital is an important initiative for the UK in terms of making their tax system digital, it's probably not the main priority for businesses at the moment. So if we look at Brexit, just to give you an overview, so as I'm sure you're all aware, we're in the middle of we're a third of the way through a transition period, a quarter of the way actually. So that's going to be in place until the 31st of December 2020. So at the moment, the UK has got legislation in place that's not extended. So that would mean that the UK transition period would end next year. And that's even if there's no free trade agreement agreed with the EU by that time. So until the end of this year, all current EU rules on VAT apply, and the UK remains in the single market and also part of the customs union. So at the moment, we haven't seen any change from a VAT point of view to how that works in the UK. The agreement with the EU is that the UK can apply for an extension by the end of June. The current policy of the UK government is not to do so. They've made it very clear that they don't see any need for an extension, and they've got no intention of asking for one, which is why they've got in place the legislation. The reality is that negotiations have faltered due to COVID-19. So Michel Barnier is not well. He's infected with the virus at the moment, and there's a number of people on the UK side who have also been infected. So, and the meetings aren't taking place. The other thing to take into account is that the global position has also changed significantly since the original decision to not extend it. So markets globally are in a very different place than they were at the end of last year. So there's been no indication yet, but I think there's a lot of speculation that there may be a delay to the end of the transition period. So we'll keep that under review. And obviously it's very important for businesses because they need to make sure that they're able to deal with the post-transition period trade rules and VAT rules that are going to apply. Now, clearly at the moment, that's not the priority for many businesses, and that might have an impact on whether there's going to be an extension to the transition period. So if we move on to the impact on the one-stop shop, so just briefly on this, so this is all about how e-commerce businesses work. So there's a change taking place from the 1st of January 2021. So it's a big change in relation to e-commerce. So the place of supply rules are changing. So there's going to be an EU-wide threshold of €10,000, which will replace those existing country thresholds. So at the moment, most countries got a €35,000 threshold. If you exceed the registration, that threshold in that country, you have to start charging VAT in that member state. They're all being replaced by a single threshold of 10,000 for all member states, and that applies to all B2C suppliers of goods and services. So once you've exceeded that threshold, you need to account for VAT in the member state where the goods are delivered to or where your customer receives the service. That's going to lead to a requirement to account for VAT in a lot of additional member states, because if you're registered in one member state at the moment, it's likely you'll have to account for VAT in every member state to which you sell in the future. So to mitigate that, the mini one-stop shop, which I mentioned earlier, is being expanded. So it's going to be available for all suppliers of goods and services. It's going to be called OS, so the one-stop shop. There's also going to be an import OS for goods coming in to the EU from outside the EU, which would include the UK if the UK has ended the transition period at that time. So there's some significant changes. And the other change that's happening is that the low value consignment relief, which applies for goods up to €22 and means that no VAT is paid on those goods when they're imported into a member state, that's going to be abolished as well. The reality is that some tax authorities were struggling to implement the technical requirements of MOS, so the IT database and infrastructure. So the Netherlands, for example, at the end of February wrote to the EU to say that they weren't sure that they were going to be able to meet the deadline. The current crisis is, in my view, likely to increase the possibility of postponement, either because tax authorities haven't got the resources to be able to dedicate to building the IT infrastructure at a time when they're struggling to support businesses, and also the appetite for a mechanism like this where essentially one member state will collect VAT which has to be paid to other member states that may be subject to scrutiny in light of the way that the COVID-19 crisis is developing around the EU. So again, that's something which will need to be monitored. It's important to recognise that the legislation from an EU level is already in place, so everything's ready to go from that perspective. There are some challenges for member states already in implementing that EU law into their local legislation, and the COVID-19 crisis is not going to help that to any extent at all. So it is possible, and again, we'll keep this under review because it's important for businesses to know what the situation is and provide updates as the year progresses. And I'll pass you back to Alex, who's going to talk to you a little bit about how you can keep up to date.
Yeah, absolutely. I think staying up to date in this time is really key. As you've seen, tax authorities are regularly changing the reliefs. If you look at the UK, the initial announcement was then changed several times to clarify what they actually meant, who it actually applied to, and what periods it actually applied to. So it's really key to keep up to date. Currently, the majority of countries require an application to be made, so obviously that's going to take time. The tax authorities have got to process all those applications. That's going to be difficult when the tax authorities aren't really working. For example, Spain, they've got very limited operations at the moment. Some countries obviously have automatic deferral, but then it's really important to make sure that you cancel your direct debit, for example. Otherwise, the payment is still going to be taken. In order to keep up to date, it's also important to review your situation and see whether or not you can benefit from any new measures. It's really about thinking whether or not you should take a measure up or not. In terms of all the latest updates, you can go to the Accordance website. So we've got a dedicated section to the different options available by tax authorities, and we're updating that on a regular basis. And we've also introduced an RSS feed where you can add the link and then keep up to date with any further changes that tax authorities make. So in terms of how we can help, so obviously, it's really important from our point of view that we safeguard trade for your businesses, and we certainly want to make sure that the wider economy isn't too damaged because of this crisis. So it's really important to evaluate your position in each country, to think about the options that are available so we can advise you on the different options available in each country and how to apply those. Then obviously it's up for businesses to decide whether or not you want to apply for those deferral, so actually submitting the application and the supporting evidence if needed. Then there's also the other option of applying for other reliefs and doing penalty mitigation. So in circumstances that Andy was talking about earlier, if there isn't any relief and a return deadline is missed or a payment is missed because of the crisis, then managing that with the tax authorities to try and get as much relief as possible. So there's also the opportunity to try and maximise cash flow. That's certainly what the UK government's done by allowing businesses to defer the VAT payment for this period of time. And therefore, it's up to each business to determine whether or not they want to make the use of those measures to enhance their cash flow. And then obviously, Accordance is here to support your business through this crisis as much as possible. I think it's really important to note that we're absolutely here to support you, but just also to remember that this is in the context of tax authorities. They're changing the rules on a regular basis. Some are stricter than others. So these measures aren't necessarily automatic, and it's really important that you know what measures are available and whether or not you can take advantage of those. Well, thank you very much. We've reached the end of the webinar now, but what we'll do is we'll open it up for some questions and answers. Some of you have sent through some questions already. I know that someone mentioned whether or not you could get a refund if you've already paid your March UK VAT bill. And the short answer is it's not certain. So HMRC haven't covered this point. But given the fact that they're advising businesses to cancel direct debits because payments will still be taken, and because it's an optional deferment, it would stand that it's not necessarily going to be easy for you to get that refund, albeit that doesn't mean we can't get in touch with HMRC to have a refund if that was something that was desirable for a business.
Thanks, Alex. So we've had a few other questions as well. So one was in relation to the quick fixes. So some of you will be aware that the EU introduced 4 quick fixes at the beginning of this year, which were seeking to simplify VAT matters cross-border. So there was simplifications in relation to proof of transport, call-off stock, triangulation simplification. But there's no indication that there's been any impact on the quick fixes as a result of COVID. We've been discussing this with our partners around the EU prior to the crisis taking place, and the reality is that not all member states have put all of the measures into place. So some of them have got partial implementation, some have got it fully implemented, and some have not got it in their law at all. So there's no changes at the moment, but we will keep monitoring that situation, and we will publicise on our website whether there's any changes to those quick fixes. I mean, we did a webinar on that earlier in the year, and the reality is in quite a lot of cases they're actually not necessarily making the situation easier for businesses. They're making it they're providing clarity, which often is very good, for example, in relation to call-off stock, and making that compulsory for member states to implement it, but that's not necessarily been easy to achieve in practice. So we've also got a question in relation to import VAT. So in the UK, I mentioned that you can't defer the payment of import VAT under the 3-month payment holiday, and the question was whether that can be appealed. I think we'd have to check that in detail. It's unclear exactly how all of this has been put into place. So normally you can appeal a decision by HMRC, but then there would normally be some reference to legislation as to how that has been implemented. My understanding at the moment is that can't be appealed. It's possible that customers will decide that they're going to change that in the future. So they may extend the payment holiday in relation to import VAT, but the other way they may look at it is that, well, the business can effectively get recovery of that, albeit that they've had to pay it up front and they then don't have to pay the VAT. So that it's not in the same way as the payment holiday. But at the moment, that's not clear, and it's not sure exactly how that's going to apply in practice.
So we've had another question or comment about VAT refunds from EU countries taking longer due to the ongoing crisis. So whilst that may certainly be the case, what we are also seeing is that tax authorities are keen to inject cash flow into the economy, and we've actually seen some repayment claims being made quicker and over the last week or two, because the tax authorities are approving those claims to get the cash back into taxpayers. Into their accounts. So it may be that EU countries do take longer, some countries do, but other countries are taking a more pragmatic approach to get cash flow back into the system as quickly as possible.
Yeah, so as we mentioned, it is, I mean, the good practice would be to submit whatever you can as quickly as you can, including repayment returns. And lots of countries have said they're trying to speed up, if you're VAT registered in a country, the process of being able to get the money back from them, because they recognise that that's the way that businesses that are in a repayment position are going to be able to benefit from their intervention, because they're not going to benefit at all from a payment holiday because they don't make payments. So we had a question in relation to the measures in Italy, and it's I mentioned that it's not applicable for non-residents. The question was whether it would apply if you've got a fiscal representative. Now, the way that they've used the term fiscal domicile in their legislation, which potentially means that a fiscal rep in Italy will mean that you can benefit from the changes, but that's something that we can answer separately outside of the webinar. So we'd be pleased to look into that, and the person that's asked the question will come back to them separately once we've researched the position. I mean, Italy has got lots of measures, but it is about whether you're resident or not, and whether the fiscal rep in Italy means that you are registered. We'll need to verify. So one general comment was about whether the slides are going to be available. So they'll be available on our website, as well as a recording, so you can access that after the webinar. There's also a question about whether we will be able to support you if you weren't, if we're not filing for you for a particular country. So again, that's potentially subject to the country, but we'd be very pleased to discuss that with you if there is any countries where you need assistance. The position, as we've said repeatedly, does vary significantly between countries. So there's not possible to say it's a one size fits all. But in lots of countries, it may be possible by having a power of attorney put into place, which is the normal way that we can communicate with tax authorities.
There's one other question in relation to group VAT being deferred. On the basis that's for UK businesses, then yes, it's all UK VAT returns within the 3-month period.
Okay, so I think there's one final question. So if anybody has got any others they'd like to raise, if they can raise them now, because we'll be shortly closing the webinar. So one was about in relation to callback verification in relation to submission of online VAT returns, and making the point that that's to an office number, and how easy is that to change it to a mobile phone, for example. So again, with that question, we'll talk to our colleagues who are involved in this area, and we'll provide a response in relation to that. So if you do have any questions, please feel free to get in touch with us. As Alex has said, we're here to support you at this difficult time. We're working as normal, so we've got our normal plans in relation to remote working fully implemented. So everybody's working from home, everybody's collaborating and working together in exactly the same way as we would in the office. So we're able to support you in any way that you need. One final question was about, do you need to submit the VAT return during the deferred period? And the answer to that is yes. The good practice in all cases is to submit the VAT return, and in some countries, in some instances, it's actually a pre-requirement. So if you don't submit the VAT return, you're not going to be able to benefit from the deferral period. So the key thing for the tax authorities is to know how much VAT they're going to receive when this is all over and the deferral period is end. So yes, continue to submit on time. If there are issues with submitting on time, for example, because of access to data, make sure that you discuss that with the tax authorities so that you're keeping them up to date, because they'll do what they can, but obviously they need to know what your situation is. So we'd like to thank everybody for their participation this afternoon, and very much hope that this was of benefit to you. So we're here to assist you. Situation is rapidly changing. We're working hard to keep on top of it so that we can support you as you continue to trade in the current crisis. So thank you very much for your participation this afternoon. Good afternoon.